The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 1st, April Fool's Day edition, Marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let's start with a thought for the day. And the thought is this: when we fail to achieve our goals, it's usually because we get stopped by frustration. Have you ever been frustrated out there? When we get frustrated, it means we're just about to learn something. Oftentimes, though, we allow frustration to keep us from taking the actions that we need in order to be able to support our goals, our outcomes out there. And to get through this roadblock, we must just simply plow through frustration, just like you're planting a nice farm out there. It is April. April showers bring May flowers out there. I believe we're going to get a few showers here in the Clearwater area, just a few showers out there. What's so important, folks, is that we've got to take each setback in life, and we've got to use that as feedback that we can learn from. We must simply just continue to push ahead. Nearly all successful people, you know what I'm talking about, all successful people experience this, and all successful people learn that success is buried on the other side of frustration. Think of it as if you were out there, you were creating maybe you were planting your garden, and you were putting seeds down. You were truly planting a garden out there, and what does that seed got to do? Maybe it doesn't get enough rain, or you don't water your garden enough, and it's trying to break through the crust, the surface of the earth. Don't you think that little seedling would be frustrated out there? It really is the same thing for you when you're trying to break through. You're going to get to that little crusty area of the earth, and it's just simply a test to make sure that you want to break through. So break through, folks. That is what you want to do each and every day. Let frustration, I say, be the source of energy, not a drain to your batteries. Let's go take a look at the drain in the marketplace. Not really much of a drain here. We have the Dow up 9 points right now. S&P down 3. Traded out at 1566. We're going to start off taking a look at the S&P 500 closing out. New all-time closing high, but of course that doesn't really mean much to us. New closing high last week doesn't mean anything to us, doesn't mean diddly to us until we see it either break the swing point high or the swing point low. The swing point that we're talking about is October 11, 2007. The high is 1576.09. The low is 1546.72. Right now today, a little bit of a dark cloud cover type candle out there, just like we're going to have a little dark cloud cover, but then the wind is going to blow that away. I suspect that's what we'll see take place inside the S&P 500. Maybe the wind will come, maybe we'll see a little bit of a rain, but what it wants to do is it wants to test that 1576.09 level. Come on, let's do it already out there. Right now the S&P trading out at 1564. Until the S&P either tests the 1576.09, closes back below that level, that would be a failure of a swing point, both on price and volume, assuming that the volume continues at the levels that we have been at, which has just simply been ultra low volume in the marketplace. Likewise, if you get the close below 1546.72, it says that it doesn't want to climb Mount Everest, even though it's close to the plateau, and that would also be a rejection of a swing point. That would be a close below 1546.72. Other than that, it's just you sit back, put your feet up in the lazy boy, and just watch paint dry. Something like that. In this case here, it's taken forever. You had the S&P actually get into that swing point all the way back on March 8th out there. So just shy of 3 weeks out here in the trading marketplace by just simply gradually crawling up. That's not how I would want to ascend to the peak if I were climbing a mountain, but that's just me. That's inside the S&P 500, and that's really the watch that's going on in the marketplace, because inside the Dow, well, the Dow had no problem getting up over its 2007 swing point. But let's go peek in here on the Dow. Let's go see what we've got going on today. No bearish candle here yet inside the Dow. Now what the Dow is doing, whoops, didn't grab the right corner of the chart here. The Dow here is, back at all-time highs, or at least made a new all-time high again this morning, getting up to a price point of 14,605. So, it hasn't really broken out with any kind of substantial conviction, but it is up over the resistance level that was really somewhat established back here on March the 15th out at 14,539. You can say, well, where's the Dow going to head to? It's a heck of a good question. Let's actually put this on a longer-term chart out here. Let's go put this on a weekly chart. And as we take a look at the weekly chart inside the Dow, we can see that rising price channel. That rising price channel off of none other than the March lows out here. You can see the Dow. I would say, if you're going to ask me where could the Dow go from here, I'd say right about that midpoint line would be a pretty good target. Now, what is that level actually going to be out here? Let me make sure this is correct. No, it didn't exactly work out the way that it was supposed to. Let me see here. A slight problem with the way that this charting software, I've got to delete a bunch of, well, let me see if I can actually do it here while we are live. Why not? I can actually overcome I don't have to get frustrated, right? I just simply have to overcome it. That becomes pretty simple. Let's see here. Problem is this software, for some reason, I don't know why it does. I'll do it. I was deleting the weekly chart. I thought I was on the monthly chart. I probably shouldn't have been deleting those weekly columns out there. It was on the monthly chart that it was a problem. So on the weekly chart, we'll just simply reset that. There we go. So that's easy enough. As far as where that price point is, it's probably another 40, 50 points higher. That would be the midpoint. If we take a look at just simply expansions of swing points, I believe we're up over the 1.618 level. And we most certainly are, so that is out of the question. However, let's go take a look at the 0.618 level coming all the way back in here in the 2011 time frame. There we go. So if we come down to, no, we're up over that level as well. So that just says, forget about old Leonardo Fibonacci out there. He's not coming to the rescue and helping us to identify where it is that the Dow could be headed. But let's go. What we do know is the Dow, if we do take a look back at the daily charts, let's switch back to a daily mode out here. We can see that the Dow, if I go back all the way to the swing point high, to its 2000 swing point high, and let's do that. That's what we're going to put as the line going across our screen here. That's going to be the high from October the 11th, 2007. That price point, 14,198.10. So we'll go ahead and we'll put that in the red, 14,198.10. You would think I would have these imprinted in my brain out here, but it's a valuable piece of information, but it's not that valuable that I want to imprint that one into my brain. But what is important is that the Dow, as we can take a look at on the daily chart, this is this red line here going across the screen. The Dow did get up over that level and never tested it. So it got up over a resistance level, and typically when you get up over a resistance level, the market will come back and test it. And I suspect when the S&P is done doing its work to the upside, we'll see the Dow come back and test that level, 14,198.10, and that's where the Dow will let us know whether this is truly a breakout here or whether this was a false break topside. But not until we see a retest of that 14,198.10 out there. Let's go take a look at the Russell 2000. The Russell 2000, Russell 2000 did get up over its highs with volume. And if you just go take a look at the IWM, you will see that. If you take a look at that on the weekly and the monthly chart, I believe it shows on those two charts as well out there. Let's take a look at the Russell 2000. Have a little bit of a bearish candle out here, but let's take the daily back on the Russell, and let's take a look at its high back here in May, because I believe that was really the high is May, not in May 2011. Let's see, or was it in 2007? Let me see here. So you've got the high back here in July of 2000. So it was July 2007, not October 11. So inside the Russell, that price point was it? Let's see here. It was July 13th, 856.48. 856.48. Let's just draw a line across the screen on that one as well. Then we'll go take a look at that May high out there. We'll see by just simply drawing this line across the screen. Let me make sure here that I extend this out a little further as we go back. So yeah, that'll be just fine. So now let's come back to the left-hand or the right-hand side of the chart. We'll go back into the 2011 time frame. Yeah, it was the 2011 time frame that we want to pay attention to. You can see that the 2007 high inside the Russell 2000, that was tested in April of 2011. You actually closed up over it in May of 2011. You see how it broke above and then came back. It was really a false break topside. So when it breaks through a old resistance level, the Russell 2000 did what it was supposed to do by coming back. And then it tried to get back inside it May 11th of 2011 on the daily. Couldn't do it. Tried to get back inside there, get above it on July 7th, 2011. Closed just slightly above and then came back inside the range. So that is truly how you test an area, or how a stock chart is supposed to test an area. Looks like I need to actually extend that line a little bit longer here. That wasn't long enough. There we go. So that'll be just fine. And then finally, let's get rid of some of the things on this chart here. If you are listening on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can always catch the live stream of this show by going to the homepage at tfnn.com. Over on the right-hand side, you'll see that button with the 3 smartphone devices. Go ahead and click on that, and you'll be able to see what we're looking at. The archive of this show is on Channel 10. We can see here the highs here also being tested, a breakout being attempted back in September of 2012 and failing. So that line really holding as a resistance area. Now you can see that really should be support. So on any pullback, and quite frankly, the work to the upside, in my opinion, has been done inside the Russell 2000, so it does not need to come all the way back there. If it did, though, and it held, that would be a heck of a nice buying opportunity, and that price point that you would be watching for would be $856.48 out there. But the Russell 2000 does not need to do that. It has already tested that, unlike the Dow out there. So that's probably something to just simply jot down on a pad of paper and watch how the market plays out. But that would be a nice entry point inside the Russell 2000, because it is up over those same swing points with volume if you go take a look at the charts inside the IWM. Let's go take a look at the New York Stock Exchange. Let's go see what we've got going on out here. New York Stock Exchange on Thursday here, closing that little resistance area that we had been watching. There was a small little gap. That gap was from the low of March 15th. That price point was 90.05, and on Thursday you had the New York Stock Exchange get in there. It looked to me like the top of that swing point, its most recent swing point, which was that March 15th level, was going to get tested. So far today, you still have just a little bit of a inside day here, but you are setting up for a bear sash candle. A bear sash candle, you get a close below the 90.70 level, and you're trading at 90.71 right now. That would do it for the New York Stock Exchange. 877-927-6648. Tesla Motors is the leader in the clubhouse, up $6.50. That's up 17%. Tesla Motor is breaking out. Google's up $5 and change. Apple, the leader in the clubhouse, to the downside, off $8. Netflix off $3. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 12, S&P's off almost 3, Composite down 10, small caps leading the charge to the downside here, off $7. So, how you doing in your NCAA basketball pool? I did not have Wichita or Syracuse. I wanted to choose Syracuse, but I did not have either of those two teams. I did have Louisville. Well, that was a easy pick, as most have out there, and I also had Michigan. So I am still in it, and I would love to see a Michigan-Louisville final out there. I did choose Louisville to go all the way, but that wasn't really a very difficult call out there. But my Michigan Wolverines, now, my daughter, she didn't like that much. She is a UF student, and so we were watching the game on the sofa yesterday afternoon, and she was good enough to come home from school to watch the game, and amongst a number of other things. So she left unhappy, and actually I was pulling for her even though I had picked Michigan. The way I looked at it, there was no way for me to lose yesterday during that game. So in any event, let's go back and take a look at these markets. You don't really want to hear about my bracket calls out there. Let's go take a look at some of the stocks here moving in the marketplace. Let's go check in on Tesla. We were looking at that earlier. Tesla here up towards its session highs, and Tesla looks like Tesla, what it wants to do is make a move up to the 48 to 50, 958 level. That's just the one-to-one weekly A to B equals CD, 54 and 92. Let's go. That's the weekly chart we had on the screen. Let's go take a look at this on a daily chart. So you can see you've got nice volume breaking out today over its consolidation area. And that consolidation area, now Tesla really came onto the marketplace back in June of 2010. So anyways, as we take a look at this, here you've got a nice volume today, 4.6 million shares, taking out a swing point on the daily chart that only had 2.5 million shares, as well as most recently 1.1 million shares. So you got a nice breakout inside Tesla Motors. And I hope that Elon Musk, you figure he is a man against the world. One of my favorite movies out there was, what's the name, Tucker, right? Preston Tucker out there. I thought that was a great movie. I thought Jeff Bridges did a good job in that movie, but there's nothing like, just truly taking on the world. Now, in the auto industry, that's a big task out there. So, but assuming that crude oil continues to move higher, maybe he's got a chance out there in the marketplace. There was a Fiskar, I think, right? Fiskar, have you ever seen one of those vehicles? Now, that is a cool-looking ride, but I believe they have had some recent problems out there. So it's a tough go for all those companies, even if you're one of the big big three automakers out there. Pretty tough go on the electric vehicles. But that'll happen one day in our future out here, just like George Jetson vehicles, right, where you'll be just simply hovering above the ground out there. In any event, let's continue looking at stock charts out here. Let's go take a look at Google, see what Google is doing. GOOG is the ticker symbol. Let's see if I've got that chart here on my screen. Most certainly we do. So we know that Google had broken through a level of support, came down again on Thursday with 2.2 million shares. So far this morning, in about an hour's worth of trading, 484,000 shares. So it's got similar volume to Thursday. Really testing the swing point, little junior swing point out here from February 26th. That had 2.2 million shares. The top of that level is 795.95. February 26th is the number. Now let's take a look at where we're likely to see Google head down to. So let's take a look at retracements here. Retracement off of the November 16th low. That's at a price point of 636 even Steven, all the way up to the high that was put on March 6th, 844 even Steven. How do you like that? You talk about hitting Basil's round number highs and the lows. I wonder if he's ever seen something like that. So you got two nice round numbers out there for Google. The 0.382 level takes you back to 764, but if it can make its way all the way back there, I say Google should come down and test that January 23rd sign of strength, that gap up. That would be the price point of about 735.79. That's the top of the gap. The bottom of the gap is that little hammer candle from January 22nd out at about the 705.34 level. That would be one area. Let's take a look coming off that little hammer-ish type candle down on January 22nd. Let's go from that low all the way up to the high. Let's see if we can get a conjunction, meaning two Fibonacci numbers moving together. And the 0.618 level for that is about 752 to 764 out there. So it looks like that is where Google would like to head to, 752, 764, where it should find some pretty decent support out there. But the real nice support, the real nice possible buy inside Google is as it comes back into that breakout area from January 23rd. 877-927-6648. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow down 5 points right now. S&P off 4. Composite down 13. The small caps off 8. Let's go take a look at a couple of stocks here. Popping and dropping. Then we'll go peek in on the actual indexes themselves and ETFs. Right now you've got Panera Bread, PNRA is a ticker symbol. They're up about 1.5%, about 250, gapping up a little bit this morning. Of course, this is running into a pretty decent line of resistance here. This is Panera Bread. The most recent resistance, you got this little high volume bar here, February 6th. It sold off most of that trading session. The high there is 169.59. So far, that volume on that trading session, 1.5 million shares. Now, today it's done 163,000 shares, so nowhere near the volume as this moves higher. I would suspect that this will get stopped in its tracks here. Let's just draw a little black line across the screen, and we can peek back in on this later on today, tomorrow, what have you. So it looks like Panera should get stopped in its tracks. Probably creating a little bear claw up there. They make some pretty nice bear claws, but looks a little bearish as it works its way up to that level. Let's take a look at Molson Coors. Oh man, boy, what a great beer. TAP, T-A-P is the ticker symbol. My preference is the Molson versus the Coors, but remember, talk about having a product and making it exclusive. Back in the day when you supposedly couldn't get that west or east of the Mississippi out there, and so you always wondered, what was it that was so great about that watery beer. In any event, those of us that lived on the East Coast, we had to just settle for Molson. So how apropos that the two are together. Now what it's trying to do, it's trading up into a area of resistance. Let's go actually take a look at this stock chart here. This is gapping up this morning. Let's see, what kind of news do we have behind Molson Coors? Nothing more than an upgrade out here. So let's go actually draw this in on the chart. Now we'll do this on the daily. We'll draw kind of the two areas of resistance, and then we'll go back and peek in on, because this goes back fairly far out here. So you've got your first gap down going back to August of 2008. That low is 54.07. So that gap is, in my opinion, I believe it's still in play as I looked at it visually, but now we're drawing the lines, it's going to make it a little bit easier. So that is the what we'll call the bottom of the gap and the top of the gap. We're just going to put this line right here at about the high of August 6th. And that's at $50.90 out there. So, and volume-wise, I'll go ahead and use the volume bar on the bottom as well. So let's make both of these lines. We'll make the lower one black. So we can take a look at this. We'll take a look at the gap down volume, which was huge. It was about 4.4 million shares. So we'll just draw a line a little bit down below to the low, and then we'll move everything off to the right-hand side of the chart. Now you can see here, as I'm moving the stock chart, you can see that black line, that's our first level of resistance. You can see how that level was tested back here in October of 2009, really for about a period of, looks like about a week or two in 2009. That level held. In fact, not only did it hold, but it held, and you had another huge volume day to the downside. Not as large as the first one with 8 million shares, but in this case here, 6 million shares. So a real strong area of resistance. Now take a look at what Molson does back in 2010. 2010 gets up into that first level, and boom, that holds as resistance. So a real strong line of resistance out there. And that's important because it is breaking above that level today. So although I didn't draw I gave you the price, I didn't put it down on a pad of paper. Looks like it's probably around $50.80 or so. And so today it is breaking out above that area. And that's really important to take note of. Because now, what it's going to first have to do in order to really prove itself is get up to that second level out there. But we can see that Molson here, TAP, has been consolidating all the way since 2008. So this is going to be an important stock chart to be paying attention to. We'll actually go and take a look at the weekly chart. It'll be a little bit easier to take a look at the weekly chart and draw that in. But now it's dealing with that second level. I'll give you the numbers. We'll come back across the screen here. What Molson Coors really needs to do is get above and close that broken window that goes all the way back to 2008. Might be a little drafty in there because it has not been able to close that window, fix that window, repair that window. $54.07. That is what you want to be paying attention to on Coors. Now let's take a look. That was volume of about, to the downside, a little over 12 million shares. Yeah, 12 million shares. Let's go see what it is moving up with today. This is a daily chart that we are looking at, and so far today it's done 1 million shares, so it doesn't have the volume in the first hour of trading and I suspect that 54.07 we'll see one of two things. We'll either see Coors close right back below that black line, because that has been a strong area of resistance, or you will see you'll see it break above there, and you'll see it head to the 54.07 level, but it's going to need more energy. If we do put this on a weekly chart, which we're going to. So there is the weekly chart, and the weekly chart really also shows the consolidation. Now I would use the consolidation range here. I'd use probably a little bit more of a conservative consolidation range. I'd use just about that level here. And what's important about, I'd probably use a little bit. Well, yeah, we'll use that. Would be if cores ever did break outside of this consolidation, or when it does. Let's assume that it will at some point in time. It'll trade all the way back to about the $63 and change level, and at $63 and change, it'll take you all the way back to $59.51, which is its all-time high back in 2008. That is on TAP as the ticker symbol. Let's go and check in on the indexes, the ETFs. Let's go take a look at the ETF structure out here. Let's see if we've got any kind of a volume inside this move here. Let's start off with the SPYs. Really, the SPYs being the king to everything out here. And so as we take a look at the SPYs, in the first hour of trading, it has done 29 million shares. So we're going to say it's 29 million shares to the downside thus far after doing 102 million shares on Thursday out there. So volume-wise, you've got more volume than we did here on Thursday. The swing point that it was really headed into is March 14th. That has 126 million shares out here. So far, now where you've got really good support inside the SPYs is back at the gap up from March the 5th. That low is 153.64. 121 million shares. It's only been tested once. It was tested with 167 million shares. So on a pullback, which is what we're seeing here today, the key numbers now, in my opinion, to be paying attention to are going to be that March 19th level. So the high there is 155.51, 155.51. If you close inside 155.51, not you, but if the SPY closes inside there, and it is coming in with volume, so that has 167 million shares. You've got 30 million shares. So it could easily have the volume today. That says that you'd then be looking for a test of the low here of March 5th again, right around 153.64 to 153.59, the actual low of March 19th. So that's on your SPYs out here. Let's go take a look at the Qs. See what we have going on inside the Qs. The Qs already having a bearish engulfing candle. The Qs here, making that's not shown, but let's go draw that pattern in. Let's take a look at the Gartley pattern that still is in place out here. There's a 0.786 Gartley pattern, really, I guess 0.841, but really 0.786 Gartley pattern that is still in place. The Q's next area of support, it's really already broken the first level of support being the March 5th area by getting and closing down below that and doing that on March the 21st out there. So support really on the Qs is, and a strong support is $67.69 set up by the March 5th gap up out there. So far volume-wise today, 9.2 million shares. That 9.2 million shares going into 35 million shares. So it's got volume today for sure, and also coming into 33 million shares from that March the 19th level. The top of that is 68.70. You're trading at 68.69 right now, so just slightly inside there. Again, that's 33 million shares, and today you've done 9 million shares. So it's got volume. We're seeing some volume inside the Qs here. Now you've got Apple down about $8 and Netflix off $4. And then to the upside, you've got Google that is up $4. Big names inside the NDX 100 out there. Let's go take a look at the diamonds, see what the diamonds and the small caps are doing. You've got the DIA that is trading down towards its session low right now. Let me just make sure I've got all the active volume. Now, we've got some pretty decent volume here in the diamonds. Already 5 million shares in an hour and 14 minutes into trading. That is pretty decent volume out here. So that says here, let's take a look at that same March the 18th level. That was it March 18th? March 19th. Let me go back and actually I'd like to use the same numbers. So on the SPYs here it is March the 19th. So let's go take a look at March 19th on the diamonds. Let's see if that had volume as well. 9.3 million shares. I just want to see what the high of that was. It's not the real low, but that's what I would be using as my benchmark right now. March 19th, 144.83. You're well above that right now. You're 145.20 inside the diamonds, but the diamonds come back inside there. 9 million shares says that it will go back and test that low, which is 143.48 out there. Let's go take a look at the IWM. Take a look at the Russell 2000 ETF. Volume-wise so far today, 13 million shares. 13 million shares going against March 19th that has 51 million shares, so that's got volume. And the IWM has been a leader. So the IWM is going to be the first one to test the low of that March 19th level. So it is the IWM that will probably give you your first release of information. The low there that is going to be tested is 93.01, and that volume there, again, 51 million shares. So far, intra-session here, you've been in 93.18, traded 93.25 right now. Again, 13 million shares. So it's got volume as it comes into that level out there. And that is on the small caps. Let's go take a look here at the currency market. We haven't done this here during this show. So you've got the euro in on the 30-minute chart in the overbought territory out here. Hard for me to really believe after busting the hammer low last week that there's a whole lot of people wanting to step up and buy euros out there. What the ECB did, yeah, people have short memories, but not that short when it comes to your money out there. So I just think the euro is going to be struggling big time for quite some time to come. I mean, knowing that the folks over in Cyprus aren't really able to access the folks who were saved. That's the irony here. The folks who were saved, meaning that they didn't take any kind of haircut, who have less than 100,000 euros, they still can't get their money. So yeah, they're not going to take a haircut, but they can't get their money. That's that's a trip unto itself out there. So let's go take a look at let's continue to take a look at the currency market here. So the euro, I think, is, and the important thing on the euro is breaking that hammer candle from not last week, but the week before. It broke it last week. Let's go take a look at the U.S. dollar, Japanese yen. That is really pulling back here. I want to take a look at this on a more of an intraday chart here. So let's go tune this in and put up the 60-minute chart and see what we've got coming on out here, and take a look at A to B equals CD down pattern. So let's take a look at the A to B equals CD. See what we have here. We come off of the high from the March 11th. The level that we're looking at is 96.70. That's going to be our A point. B point that we're using on this A to B equals CD down is low at 2 in the morning on March 18th. That level 94.30. And so what we can see here is it is making a 1 to 1 point. Made the 1 to 1 A to B equals CD. Had just simply a slight little bounce here, just simply consolidated. It's now broken through that consolidation range. And now its sights are set at the 1 to 1.272, $93.06 out there. And as we take a look at retracements now, coming off of the swing point low out here on the 60-minute chart, takes you back to 5 p.m. on February the 25th. If we go from that low all the way up to the high, our A point here, looks like I just missed it, but you can see right at that 1 to 1.272 level, setting up a nice Gartley buy pattern. But the key is going to be the bulls need to show up right at that level, right around $93. We're going to just call it $93 even Steven out there. If that level fails, what the U.S. dollar Japanese yen will do, it'll make a 1 to 1.618 and make a 0.786 Gartley buy pattern out there, right in around the $92.13 range. So the Japanese yen is setting up for really a nice buying opportunity, but that presumes that we are going to see some bulls show up in the marketplace here. Now, if you take a look at the 60-minute chart here, the 60-minute chart, you can see it still never was able to, even on a little bit of a bounce this morning, and that's coming in at 3 o'clock this morning when it made its lows. Now, we're looking at a 60-minute chart, so it wasn't exactly at 3 a.m., but at the on the 60-minute chart, what you can take a look at is take a look at this wide body out here, and you can see as price moved up into it, it never was able to get above that body, and that's why you want to have some patience out here. I know that you like to be able to buy a bottom tick or sell a top tick. When you see these wide-ranging bars, they're really telling, inside the currency marketplace especially, but it's true, quite frankly, on any stock chart. Wide-ranging bars rule, because they give you so much information. When you see a wide-ranging bar, the problem is you like to buy that bottom tick, but it's telling you, in this case here with it moving lower, that your real conviction was to the downside. Now we're seeing on the 60-minute chart a second wide-ranging bar. And we had another one right here at about $2,100 on March the 31st. Maybe we're going to make that 0.786 Gartley buy after all. 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 31. S&P is off 8, trading at 1560.80 out there. And we're going to go peek in on the Great British Pound. Just start off with the monthly chart and move our way in. The monthly chart, if we take a look at last month, very close to a hammer candle out there. It was not a hammer, too much of a wick to the upside, but we can see here that the bulls definitely in charge of the pound at the end of the trading session. They got pounded early on, and as we switch over to the weekly weekly chart, it formed a really nice 0.786 Gartley buy pattern. So it forms that Gartley buy pattern. I'll go ahead and erase that off of my screen, the colored in area. And as we take a look at that, we can see also had we had exactly what you wanted to see, which was the bullish engulfing the week of March the 15th. Now that was on the weekly. I know that we went ahead and took the trade, suggested that you take the trade on air, because what we were looking at on the daily chart was we were looking at the hammer candle out here. And as we take a look at the hammer candle right here, that was on the trading session of March 12th, followed up by a nice little bullish engulfing candle. What we also identified for you was the level of resistance. That level of resistance, it can go further back on the left-hand side of the chart, but we were using the swing point low from June 1st. That is 152.67. As the Great British Pound got up to that level during the trading session of March 25th, I took half of my profits off of the table. You can see that resistance line as we come back across the screen. That resistance line was a strong area of resistance, or what really was a strong area of support going back to September of 2010 out there. I just simply have the line drawn right here, just the smaller one to take a look at. Now, not much of a backup. I was looking to be able to add to a position on a 30-minute chart out here, and never did make the full Gartley buy pattern on the way down. And we can see here right now it is traveling in the overbought territory, so I'm not suggesting at all that you jump on board this trade. In fact, what you would be looking for is some type of Gartley buy pattern, but we never got that at all after it made its first move up, made its first significant move up here, and you just have to be patient inside the pound if you're looking for an entry. If you're inside the trade, you should have taken some of your profits already off the table because of moving into the resistance area on the daily chart. It's a strong area of support, and it may end up being a strong area of resistance as well out there. Now, you get above that level, that's really what you want to see if you are bullish in the marketplace. But we've seen, in essence, now that black line there, if I were to take this line and pull it back across the left-hand side of the chart here, right there was kind of hooked up to the low of the swing point. What you can see here, actually, was really this one right here that I was using as the benchmark to take profits, which was the January 16th level. That was the lower one, right at about 152.7 out there. And you need to take these areas of support and resistance and be willing to move them up or down just a tad. You don't have to anchor those right to the exact swing point low out there. You need to, at least my experience has been, use these as a guideline, as Jack Sparrow used to say, or still does say, in Pirates of the Caribbean out there. So you can see here you're running into the resistance area again. So if you're still in this trade, it's a good place to at least put a trailing stop in on half of your position. I am not exiting this at all because what I think we can get, if you get a break above the old resistance, the old support line, now it's new resistance, what you'll see is at least 154 out of this. But I suspect what we'll actually see, and thank goodness to the ECB out there, I was blowing them hugs and kisses when they did what they did in Cyprus, because pounds and dollars look like what those folks want to buy out there. That would send the pound up to about 157. That would be one heck of a move, having caught it at the hammer low. Folks, stay tuned. Basil Chapman will be up next, and Larry Pesavento. Have a great day. I look forward to seeing you in the morning. Take care, folks.